Alright mate, yeah, let's have a look here. Definitely going to 16 billion market cap, 50% more down from here. You don't know how it's possible. Yeah. Well, I suppose, you know, parabolic moves like to retrace 80 to 90%. We are now down 83%. Is the 90% possible? I suppose it is. You know, are we going to create a higher low from there? That's 11,000. You're saying 16 billion. Yeah. You know, I can't argue with you. You know, looking at this chart, I would think it is very, very possible for that to happen. The only saving grace here, you know, would be somehow if we put in a bullish stop hunt and somehow break back above. But in this situation here, when you break down below all these moving averages, it is likely to drift and to form some sort of like we already have this trend line here. This will be very important going forward because it's the start of a pattern, and that can, you know, it can take time to develop. But you know, we may form some sort of bottoming pattern like that, for example, and this could work down whatever way it's going to work down. It's a very rough draw, of course, but markets usually like to form some sort of pattern like that. You know, and if I just move this out here, this is what's this? This is Bitcoin chart. You know, very roughly, it's just a random chart, but you can see as well, you know, on the lows, we did create some sort of a bottoming pattern. Now, it's tough to. I mean, you can just see. Well, you can see that trend line. We didn't actually form a really good triangle or anything. You know, it wasn't a great pattern, but it was an Adam and Eve. It ended up being an Adam and Eve pattern that broke up. But again, you know, there was that kind of bottoming pattern. I wonder if I go to total market cap. I want to do the total market cap 2 because the total market cap 1 is basically the Bitcoin chart. But you can kind of see that this is very, very similar. I suppose, right, if we really want to look at it, and the bottoming pattern down here, yeah, not great at all. I thought there might be some sort of a pattern. Yeah, basically nothing. There's nothing really pattern there. But when this trend line broke, see when we had a flush lower, and when the trend line broke, that was when you wanted to get long. So we could look out for something similar. We do have this trend line right here at this point in time. Now, of course, it's a bit early for this trend line to be looking at it, but it also is probably a bit early to be calling, you know, that the entire market is bottomed. The total market cap 2 and the total market cap and even Bitcoin, you know, they have not hit 12k yet. Total market cap has not hit the red 200 moving average. Bitcoin has not hit the red 200 moving average, both on the 2-week charts. So the overall market does still imply more downside. Is that a 50% drop in DeFi? Well, you know, I can't fully argue with you according to this chart. Like, I just want to kind of point out, you know, the last time, you know, when you consolidate along this white 100 and you start to break down, it was in the middle of the last flush. Now, we don't have a red 200 moving average on this yet, but it will be below price somewhere. Now, we could try and work out the exact number of this. You know, we could change it to a 180-day moving average, for example, or a 160-day moving average, and that would give us a closer gauge. You know, and it's probably in here somewhere. I'm not too sure where exactly it is, but with some investigation, you could work out where exactly that price is at. And if as you can see here, you know, when price flushes through the white 100 and comes down into the red 200 moving average, it's going to be a big level. So wherever that red 200 moving average is on that chart. But if we just want to use the total market cap, this is the total market cap. Is this 1 or 2? Sorry, this is 1. But you know, the DeFi chart will probably bottom the same as the market cap, right? And we already know where this red 200 moving average is, and that is down here at about 500 billion. We could say 500 to 550 billion. I like that level, but I like a pierce below it even better if we can get that. So we do have a ballpark to be playing with. You know, somewhere here is between 450 billion and 550 billion, or 600 billion, we could say, sorry, 450 to 600 billion. You know, at this point we have to imagine is the bottom of the market. And when we get in there, DeFi will probably get in there as well. Now, if we want to look at the total market cap, how much of a drop is that? You know, there is your 43%. You're saying the DeFi could drop 50%. I mean, the total market cap pierces the red 200 moving average, which is possible. That's a 40% drop in the total market cap. Now, if I go to the total market cap 2, excluding BTC, this excludes BTC, so it's just all the altcoins excluding BTC. But it's a very similar story. Yeah, you can see there it's still a 45% drop, just like the total market cap 1, or the normal total market cap. So we can have the same thought process, I suppose, that a 40 to 45% drop there can be the bottom of the DeFi market, somewhere around here, and it's basically spot on to your your 16 billion area that you were calling for. That is where the red 200 moving average should be, roughly, and that's obviously a rough number, but that's where it should be. You could investigate further, obviously, by changing out the 100. Well, you can keep the 100, but just add. Let me do that actually. Okay, so the best I could get there is a 140-day exponential moving average, and that's where that is. So if that's 140. You know, the whites of 100, you know, we can guesstimate that, you know, you double the depth of that, and you're talking somewhere down here in that ballpark. There would be your red 200 moving average, down at about 20 billion, and maybe slightly below it, but roughly we'll just say 20 billion now. But your 16 billion is definitely a very good target, 16 to 20 billion. So, you know, you're the 50% drop, the 16 billion, you know, 16 to 20 billion lines up with the drop in the total market cap and the total market cap 2. And we could also say, if we go to the Bitcoin 2-week chart, well, we can see there now it's not a 50% drop in Bitcoin, but if we just take a rough measurement, you know, if we got a 20% drop in Bitcoin, that is into a big level. But Bitcoin is the largest asset, so it would drop the total market cap a little bit more. And if Bitcoin drops, everything else is going to drop. So I tend to agree with you that there's a ballpark potential 40 to 50% drop. What is interesting is that there was a yearly. Let's look at this. Look at the yearly chart. Now I know you can't see it, but on the left hand side is Bitcoin. On the right hand side is the DeFi index. But look at this retrace, a beautiful retrace. Now there is reports that the USA government could actually ban DeFi. Now obviously that would be detrimental. I mean, I don't think that's going to happen. It's not DeFi that's blowing up the market. It's bloody bad people like Sam Bankman and FTX who have poor money management and obviously scam their members with fraud and stealing money and stuff. So just because of bad actors, you know, such a beautiful product and beautiful thing like DeFi should not be outlawed. But this is the total market cap on the left hand side now. We actually are just attempting to have a bullish yearly stop hunt. Now it is getting into the end of the year. It's going to be very interesting to see if we do get that more downside down into this yellow 9 EMA on the yearly chart. It's trying to have a bullish yearly stop hunt, but the problem is this is run out of time. So that's the total market cap. This is the total market cap 2. It is not a bullish yearly yet, but it's a beautiful retrace. Like it looks fantastic for accumulation. Yes, we can get more drops and whatever, but you know, to be averaging down into this, it looks really good. Of course, you know, everything is against us right now. The world, the macro situation, the Fed, the governments, the collapse in lots of big companies, the recession, the interest rates, the dollar going up. Every single thing is against us right now, but that will slowly start to change. Now this is a chart of the others. This is the shitcoin chart. basically. Well, it's got no Ethereum and no, I think it's got no Ethereum and no Bitcoin, and it's all the small altcoins. But you can see that it's a beautiful, beautiful retrace as well. Part of the reason why a lot of people are struggling right now, well, maybe I shouldn't, I didn't say that properly, but struggling to understand what the market is doing, is because it's very possible, again, that we get a small candle like this. See here, we got a small candle, and it's frustrating if we do get that, but if we do get that, we can be more confident then that we are going to break back up. But if we get a small candle like this, well, it's going to be good for accumulation, but it's not easy on the patience. Don't get me wrong, of course there'll be still 200 to 400% bounces in coins, and maybe more in certain coins, but it's not bull market territory. But we may need to form a small candle there, just like we may need to form a small candle on DeFi. Now, if we look back here, it looks smaller than it is, because you can see that this retrace back up is a huge bounce. That's a 50% bounce back up, which is massive and gives big moves in the overall market. So maybe I shouldn't draw this so small. There could be more retraces back up, and we need to see if it flips green on a year. Well, we need to either get long or hold our coins and maybe sell into that, and then. Well, we don't have to sell into that. We could just keep accumulating, but you could take profits into the bounce, of course. But I would imagine with a bad retrace like this, that something like this is possible. That we need a year like this, and then we get the BART back up. And DeFi will likely be very, very similar, right? In my opinion, because we need to turn this. This is all distribution. This red candle here is distribution. Right, this was all distribution. This green candle is reaccumulation. The small green candle will be reaccumulation, if we get that, of course. But and then obviously, then you can, after reaccumulation, you get to move back up. So what's important to understand here is that we are going through a debt cycle, right? And the debt cycle is what's controlling the market. And this is basically what everybody needs to understand. We went through the leveraging phase, right? We have just gone through a leveraging phase, and we are in the process now of, well, they call it a depression here, but it's a deleveraging phase, and we are going through a deleveraging phase. Now, it'll get reflated. You can see here it says 2 to 3 years, but it's tough to say. Normally it does take longer than a year, so it says here 2 to 3 years, but this is more of a stock market thing. It's not really for cryptocurrencies or whatever. But then we will go back into the reflation when the Fed tightens up, stops tightening stuff, stops with a QT or lowers a QT and all the rest, and then we can move back into the reflation. We are in the depression stage right now. A deleveraging stage. This says depression, but it's not really. You can call it depression if you want, but everybody will put their own word on it. But the debt cycle is the most important thing at this point in time. That is what's controlling the entire markets.